Thank you everyone so much for joining us on day 2 of Permissionless. The topic of this panel is the evolution of centralized exchanges. Today we're joined by 4 esteemed guests: Jason Lau, Chief Innovation Officer of OKX; Guy Hirsch, Global Managing Director at Kraken; Claire Ching, Head of Institutions at Gemini; and Greg Tussar, Head of Institutional Product at Coinbase. Thank you very much for joining us today, and thank you everyone for listening to this panel. So, starting us off, Thank you. Starting us off, centralized exchanges have played a huge role in crypto. We've been there, done that. Centralized exchanges have been here from day one. Everyone on-ramps and off-ramps through centralized exchanges, right? But one thing that we constantly talk about is the institutions are coming, right? And we always hear that, there's the spot ETH ETF, all of these ETF applications, but I think for a few of us, we've always struggled with what are institutions, especially if you don't come from a TradFi background. So I just wanted to take some time from perhaps Greg or Claire, given that they play an institutional role within their centralized exchanges. What are institutions, and what does it really mean when they are coming?
Sure, happy to kick that off, and thank you for having us, and thanks to everyone for being here. So, institutional in crypto is kind of a funny word where I think if you ask 10 different people, you'd probably get a bunch of different answers, and I think it's changed a lot over time. I started my own journey in crypto in 2017 as a co-founder of a company looking for the wall of institutional money, which that year was supposed to be the year of institutional in 18 and then 19. And at that point, institutional really meant venture, and on the other side of things, largely prop trading, high-frequency market makers who were really important liquidity providers, but not really what I think at the time would be traditional institutions, pensions, endowments, sovereign wealth, et cetera. And I think it really wasn't until 2020 when that changed a lot. And I think back to when some very notable commodity trading advisors and macro-oriented shops were starting to sort of actively trade Bitcoin as an inflation hedge. And that begat interest from long-short equity hedge funds, and that begat interest from corporate clients who started to put crypto and Bitcoin on balance sheet. And sort of, that really brought a whole series of other kinds of institutions into the space for the first time, I think. Even though I would say some corners of that have receded with the winter, importantly, certain parts of that capital I institutional, if you will, ecosystem have continued forward, so the likes of BlackRock and Franklin Templeton and others. And I think part of the reason is, this is a space where you have to have a long-term commitment. And so I think if that moment in 2020 really woke a lot of people up to the space who've been investing throughout, both bull and bear markets, which is quite encouraging. But I think the needs of those institutions has evolved as well. So originally on the market-making side of things, good exchange technology, a healthy liquidity pool and ecosystem. On the other side of institutional, it's really it starts with custody. And I think it's, the conversation starts first and foremost with that, but then building around that better trading tools and financing. And today we announced a Web3 wallet product to have on-chain access and activity all sort of integrated together. And so the needs of that customer has evolved a lot over time as well.
Yeah, absolutely. I think adding to that, I think the original definition of institutional is literally just not retail, which is a huge bucket, effectively. But I think as we look forward here, prior to joining Gemini, I was in traditional finance, sitting at Deutsche Bank and foreign exchange sales and trading desk. And I would think that the institutions that we were facing in that type of environment, that is, asset managers, investment managers, hedge funds, family offices, corporates, banks, and beyond, and pensions, those are the type of institutions that we are really focused on and very excited about as we sort of move into this next cycle here that we're looking into. Yeah.
Anything to add? Okay.
Yeah. So in 2014 or so, I was working for Samsung, and one of the things that we did was we were trying to develop this kind of point of sale, and one of the things we wanted to do is to incorporate Bitcoin as a form of payment. So to differentiate from Apple Retail. So to me, that was the first time I saw or led an attempt to have an institution kind of adopt crypto. So yes, there's obviously the prop and the hedge funds and companies who are in the business of investing and trading, but I think building up on what we saw in NFT, there were so many companies getting into the space, not because they wanted to speculate or to kind of have a better portfolio, but they wanted to engage large swath of users through affinity to get them into crypto thanks to affinity with the brand. So we saw companies like LVMH, we saw Amazon, we saw all sorts of companies kind of doing or getting into crypto as institutions and really trying to figure out, wallets and so on and so forth. And I think that drove kind of a whole new set of institutions into crypto because of what we saw in kind of pop culture and culture meeting crypto.
No, I think they covered it really well. I think just one minor addition is probably the growth of crypto native institutions, and institutions, again, being very broad, crypto native sort of maybe wallets and merchants and things that need liquidity, and they come and source it from centralized exchanges like ourselves.
And I also want to highlight the point on corporate clients, because that's probably been one of the fastest growing parts of our business is corporate clients who are interested in engaging in either as part of an NFT strategy, the need to hold assets, acquire crypto for gas and have all of that integrated in a way that's sort of consistent for a corporate user. So that's been one of the most exciting on-chain areas of growth for us.
That's fantastic to hear. Hopefully some Fortune 500 companies are coming to buy our bags. But obviously, as institutions have come into the space, the demands and needs of them have evolved greatly since probably 2020 when that institutional demand picked up. There's been a bunch of new products to launch, including Coinbase's new institutional lending product. Would you guys mind talking a little bit about how that product roadmap has changed and what are sort of the needs and services that institutions are looking for today?
Sure, I'll start. So I think one of the things that we saw is that there's a bottom-up type pressure to get institutions to get into the space. What I mean by that is, for example, the RIA space. So these investment advisors are serving clients, retail clients, and these people are hearing about crypto, about friends, families. They read about it and they say, okay, allocate. I want my portfolio to have some sort of an exposure to crypto, and that is driving an increased adoption among the RIA space into crypto. And then you have more of a kind of top-down guidance from visionary CEOs and things of that nature, saying actually let's figure out how to do this. Let's figure out if we can do logistics on blockchain. Let's try to figure out if we can do all sorts of really cool things. And the gatekeepers, compliance, legal, finance, they're starting to get, I think, more sophisticated in terms of what they need in order to allow the company to make that play. And companies like Kraken, and others are, we need to develop that muscle to provide those gatekeepers, to provide those kind of control functions, what they need in order to get more institutions into the space.
Yeah, I think on the product roadmap, that was a question, right? Institutions, especially after what happened in 2022, they really, Greg mentioned a bit about custody, but also beyond custody is also the need for additional transparency in the space. I think fortunately we're in crypto and there's a lot of on-chain tooling that actually can enhance transparency that we can provide to clients. And a lot of clients have actually asked for things like proof of reserves, which I know some of us do here. We just issued our 10th straight monthly proof of reserves. And these are tools that I think are very valuable as we continue to iterate through and enhance and provide clients with additional custody, but also comfort about how they store assets with platform. And then lastly, for those that don't want to store assets on platform, one thing that we're working on is making sure that we have an open platform whereby users, clients can bring their custodian of choice, and we will integrate and work with third-party custodians to enable that off-exchange custody. We recently announced partnerships with Komainu as well as with Copper, where clients are actively using those today.
I think in the same way that the definition of institutional has evolved over time in terms of who's engaged, I think the definition of what a centralized exchange is has evolved as well. So just zooming out for a moment, I think about our business in 3 core pillars. There's Coinbase Prime, which is really geared, if you think about it, more as a brokerage function than as an exchange function, routing to the best price, integrated with custody. That's where the wallet services is, and that's for the fund. And the roadmap there is, just the same way we all began our journey. They begin their journey acquiring assets, but then they want to go on chain, and then they want financing and all of those other things. So that's sort of the Prime roadmap is catering to that client segment. On the market side of things, the roadmap is really about growing more assets to be able to trade in more jurisdictions. And so for us, that's been about launching listed derivatives here in the US. So we have a listed futures exchange, and then launching offshore with perpetual futures and looking to grow more assets and more jurisdictions available to more clients. And then the third leg of the stool is the asset management business, which is catering to the pension endowment that wants this wrapped up in a fiduciary wrapper, which is something they're familiar with. And so any one of these kinds of capitalized institutions should have something that's sort of interest. But those are the 3 different directions we're headed in.
Gotcha.
Yeah, no, I think when we think about it at Gemini, I think we want to be very close to sort of like the user experience and workflow. I think servicing an institution which is like a large group of people, versus servicing an individual is entirely different in terms of what their workflow is. And so really understanding that very well and providing and tweaking our features to really match how that fits into their overall workflow and what's efficient for them is what we're really focused on. And I think, in addition to that, when you zoom out a little bit, I think everyone can see that centralized, liquidity pools have been, decreasing in a lot of ways. And so during this market, we built this product where we are offering sort of like OTC liquidity that's aggregated, that also provides you with a intraday sort of credit. So you can trade unprefunded effectively to have that capital efficiency, settle net at the end of the day, and then continue to kind of cycle through. And so those are things that we're really focusing on in this market to kind of move really closer to what our clients really want in terms of operational efficiency and capital efficiency.
Gotcha. Thank you for the answer. I think on the last note about institutions, right, one of the big stories for this year has obviously been the spot ETF applications. We had a whole host of BTC applications, and now we have a few ETH applications coming in. And I think the 2 questions I wanted to ask is, firstly, what does it take from a centralized exchange perspective to support these ETF applications, right? There's custodies, there's benchmark providers. And the second question that I think a lot of people here are interested in, if these ETFs do get approved, is that institutional demand really coming? I think us crypto natives have a sense like, once the ETFs get approved, like $100 billion is suddenly going to pour into BTC and ETH. We're going to get the start of the next bull market. I'm not sure we're going to get that, but I would love to hear some of your opinions on that.
Sure, I'll start again. So we have an offering. We have a company called CF Benchmarks, and CF Benchmarks has been the leader in quoting Bitcoin and other assets to assets managers. And CF Benchmarks was actually the one chosen by BlackRock as part of their Bitcoin ETF application to quote the Bitcoin price once the application is approved. So we have established ourselves as kind of leader in that, in kind of supporting those asset managers, those TradFi players to get into the space, and therefore kind of extending our capabilities like beyond just kind of the pure kind of crypto ecosystem. I think that there's good things and bad things about the kind of a Bitcoin ETF. The good thing is that more people will be interested, more people will learn, more people will allocate, and more people will be comfortable with the asset class. I think the bad thing is that it's not like the real thing, right? I hope that we all want people to like be crypto natives, like use wallets and leverage what this amazing technology is unlocking. And so that's the bad thing. But I think net, this would get a lot more money into the space. That's kind of my assumption.
So I think that the important pieces are clearly there's a custodial role. There's the thing we don't know yet is whether on the basis of the most recent outcome of Grayscale and the other applications, what it will take to overcome the objection of regulated market of sufficient size. And so I think the next few weeks and months will be really important in determining that, whether we need surveillance sharing agreements between equity exchanges and crypto spot exchanges, or whether the existing agreements between futures exchanges and equities exchanges are sufficient to overcome that. But either way, there's surveillance, and then there's benchmarks and trading and so on and so forth. And we spent a lot of time on the custodial side working with asset servicers for ETF issuers to ensure that the plumbing and the process by which market makers create and redeem and so forth is all squared away, so that when they're ready to launch, we're ready to launch, and that's quite exciting. Please don't ask me to predict when they'll launch, because I don't know. And I anticipated that as the next question. So, but kidding aside, I do think there is a large swath of institutions, as we define them, that would want to own Bitcoin as an investable asset, and this may be the only way they can do it. And I think the investment advisor channel is probably the most important one, which is, the issuers that have, spent a long time cultivating that. For them to own spot Bitcoin is complicated and operationally difficult. For them to incorporate through an issuer they already have a relationship with a Bitcoin ETF is quite operationally easy. And so I'm optimistic that it will grow assets, and I do think hopefully it's a gateway, to more on, sort of in the same way it is for everybody getting involved to start with, but we'll see.
Yeah, I mean, I echo what Greg said in the sense that from a custodial perspective, I think, we've had already many sort of like super days and many, many meetings trying to figure out the exact workflows of what that looks like, right? And, when you think about sort of, if you look at it from an ETF issuer perspective, if you look in the history of ETF issuance and the type of funds that are issued, there really hasn't been like a new asset class on which on day one of approval, 5 or 6 or however many funds will be approved at the exact same time. It is as if you start the race and you start the clock at that moment. This actually has never happened in the ETF industry at all, and everyone, for them, I think this is the absolute Super Bowl of like the century, effectively, to figure out who can go ahead and amass the most amount of assets, and whoever goes out the gate the first, or to go out the gate and accumulate the most assets, there's certainly a power law there of really accumulating that. And so we are super excited to support some of those issuers in that pursuit, and we're really optimistic in terms of what could be brought in terms of interest into the space, right? I think that for those of us who are at this conference right now, I don't think that we're sitting around thinking, hey, if I hold Bitcoin in my wallet right now, that I'm going to go ahead and convert that into an ETF share, certainly in the fund. I don't think that we're that population, right? So if we're all in the business of bringing more adoption, more users into the space and more capital, this is a massive way to do it. And so this, as far as I see it, we see it at Gemini, it's within the next 6 to 9 months, or within a year, hopefully, that this will be one of the biggest catalysts we can have in the industry. So we're very excited for it. Happy to support it.
Yeah, I think just to add and zoom out just slightly, I think symbolically, it is so momentous, I think, for Bitcoin, hopefully ETH soon to follow, that, I joined crypto back in 2013, and the ideas and dreams of how Bitcoin would be adopted, people would know about Bitcoin, and to think that we already have a sovereign nation in El Salvador adopted as a legitimate currency, and yet we don't have a spot Bitcoin ETF is a little bit mind-boggling, and so we've kind of went a little bit around, but to have that be approved in the US, all eyes around the world are watching this decision, especially how tumultuous this journey has taken, all the conflicts that we all know we've gone through, it's just going to be a really momentous moment for us.
Gotcha. So if you had to put a probability, I'm kidding. Yeah, I think those are all fantastic points. I actually ran a Twitter poll on my Twitter account. It's really small. There's like less than 2,000 followers. But I asked people, assuming a spot ETF approval did go through, would you rather self-custody or would you buy the spot ETF? I want to think my followers are relatively crypto native, but it was actually pretty evenly split. It was 60% self-custody and 40% buying a spot ETF. And I do have to say that after working in crypto for a while, I'm like really, really scared of self-custodying. There's just like a lot of OffSec worries that one can be concerned about. So I do think it'll be a big unlock for the industry. I wanted to move on to the next general topic. Obviously, regulation. I do think we have to answer a few questions there, given that the regulatory environment has been fairly challenging, for lack of a better term, in the previous year. We've had a few court wins in the previous months, but we've also had a few sort of like DeFi-specific actions. For example, the CFTC actions against 3 DeFi protocols that happened last week. I wanted to ask you guys, what type of regulatory frameworks do you guys need as a centralized exchange in order to succeed or just grow or just do business, you know? But,
I'll start that one, I guess.
go ahead.
I think that Coinbase has been fairly vocal on a lot of these topics and has been petitioning for clarity for a federal level regulation for some time. And it began that journey sort of petitioning for regulation and then absent a response to that, responding to our own petition with some answers that like, hey, here's some ideas for how this might work. And so I think that the answer is not necessarily a specific structure, but a structure. And then, you know, once there's clarity, we can work with it. Now, I think that there's versions of that that are SEC-oriented. There's versions of that that are CFTC-oriented. There are versions that are split between the two. And I think any of those can be workable from a from a practical perspective. But a lot of them really begin and end with what are the listing standards for assets, and are those things that we think should apply to crypto assets? They're different in their nature. You know, an S1 isn't the most appropriate way for a token to come in and register kind of thing. And I think if we try and apply a cookie cutter model, we're definitely going to kill crypto in the US. And so I think there is some flexibility needed with respect to what it means to be a security or not, but generally within that flexibility to work with, you know, broker-dealer, customer asset segregation rules and those kinds of things. Those can work, or the NFA and CFTC have their own version of asset segregation. Those can work too. But there's some really big unanswered questions about, like, what's a security and how do you list one? And until we have that, I think, you know, it's going to be hard to make progress.
Yeah, so obviously there's a lot of focus on US, and you know, US is the kind of the center, the sole superpower in the center of the financial world, and so we, I think what presumably would happen is that eventually we would have clarity. It will take, you know, months or years or whatever, but eventually there will be clarity in terms of what are the rules of the road and how to, you know, how to do things in a way that allows this innovation to flourish, rather than kind of hinder the, you know, the path to, I think, what would unlock to everyone like massive opportunity, massive economic opportunity. But I do want to say that even though there's a lot of focus on the US, I think if we look elsewhere, we see a lot of positive movements. We see clarity in Europe. We see the Hong Kong regulator kind of calling for crypto companies. We see what's happening in El Salvador. And I think if potentially there can be a watershed moment, but not because of the US. Like there's an election in Argentina coming up, and one of the candidates is extremely kind of pro-crypto. So if something like that happens and a big enough economy kind of is moving to something that is very pro-crypto and that can unlock like a watershed moment without us noticing it, and massive adoption in other parts of the world that would eventually be caught up maybe here. So I'm very bullish. I think there's a lot of good things that are happening, but also included in the US. In the US, I think we would eventually have clarity.
Just to add a little bit on that. So OKX centralized exchange services are not currently available in the US, and partially the reason is because that regulatory clarity is not quite there yet. But we've had very extremely constructive dialogue around the world in France, in Malta, under the EU's MiCA framework. We're applying for our license in Hong Kong as well. And in Singapore, and in Dubai, also the Middle East, I just want to add, is also a very vibrant hub for crypto activity. Dubai actually set up a purpose-built regulator called VARA that's designed from the ground up to regulate and work with crypto businesses. So we're seeing a lot of promising signs around the world. We're just hopeful that'll come and happen here in the US sooner.